All right, welcome everyone. Welcome back to the live streams. Welcome back. It's been a while, but we are back. So, as usual, the live streams will be held on Tuesdays and Thursdays at 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. All right. Hopefully you guys remember that. All right. So let's go ahead and start off with the CPI report that we got for July. So it seems like it's business as usual for this entire year for CPI. We're seeing deflation. Okay, that's what we want, right? That's what the Federal Reserve wants. And for the fact that we've actually got a pretty good data again, even just headline CPI was good as well, and even core CPI cooled off too. Continues to cool off. And what was so important about this report is that we have the next FOMC meeting on September. Okay, I think somewhere between September 19th to 20, or I believe it's 20th to 21st, but it's somewhere around there. And Jerome Powell himself stated that the next two CPI reports and jobs reports, specifically JOLTS, okay, the JOLTS report, are exactly what they're going to be looking at to determine whether or not they want to increase interest rates one last time for this year. Now, thanks to the fact that we've had softer data now, we're seeing inflation really cool off, okay? There's a new sentiment in town, right? There's a new sentiment in town. And what's going on is that instead of just solely focusing on the fact that there's a possibility for one more interest rate hike for the rest of this year, okay, there's also a growing new sentiment that the Federal Reserve might not just increase rates at all anymore, right? And in fact, the previous one, the previous interest rate hike for 25 basis points was the last one. And so if that is indeed true, okay, because remember, we have one more CPI report to go through and one more JOLTS report to go through, okay? And, things can change, right? Things can really change. Or, again, we can just go back to that initial sentiment or I guess assumption or presumption that we still have one more interest rate hike left before we start to cut interest rates, before the Federal Reserve pivots in early 2024. So right now, personally for me, even if there's a new growing presumption or sentiment towards interest rate hikes, and the fact that, like what I said a few seconds ago, that there could be a possibility now that we won't be seeing another interest rate hike, and instead the previous one was the last one for this year before we start to pivot in early 2024. Now, again, I to be honest, personally for me, I don't think that's the case just yet. Again, we still have a few more reports to go through for inflation and jobs reports, or specifically JOLTS. That's kind of where I am right now, and that's kind of where you guys should be as well, especially if the federal funds futures market is showing us that there is this new sentiment or new presumption that the Federal Reserve may just not have any more rate increases for this year, and we're just going to be paused and sitting at the highs here for this current interest rate hike cycle. Okay, so hopefully that makes sense. Did that make sense, everyone? Hey, Joe, what's up? I didn't see your comment here in your live chat. You said you sent your DM on Discord, by the way. Hope you're well. Thank you. Yes, I'm doing very well, and I'll make sure to check your DM there. So right now, okay guys, so the current benchmark interest rate right now, the range is at 5.25 to 5.50, right? We saw that increase from the previous interest rate hike. And so again, I told my members this a couple weeks ago actually, that there is a possibility still left on the table, which is right now a bigger possibility than having no interest rate or having no interest rate at all anymore, or interest rate hikes anymore for the rest of the year. But I've told the members here and students a couple weeks ago that the federal funds rate or the benchmark interest rate can go up to 5.75 if they decide to increase it by 25 basis points again. All right, and because that's again, that was the initial, and that is still the initial presumption and sentiment. Okay, and just saying right now, okay, that is my current own personal opinion that that's still going to be the case. All right, but again, that's going to be different. Okay, that could be different is what I'm saying here, right? Because we still have another CPI report that comes out for the month of August, which will come out on September. I believe it's a week before the September FOMC meeting. Okay. Hey, what's up, Hugo? What's up? What's up? Nice to see you in here. Thank you. It's just random, I believe, AI generated jazz music, bossa nova specifically. So with that in mind, this is literally what I've been looking for, right? This is what I've been saying and really pounding inside your guys' head since late last year and even just middle of last year. So that we need to be prepared for 2023. And again, what did I say late last year specifically? Okay, the stock market will be at a great area and also at a very large discount, okay, starting from 2023 to 2026. So whether you're a beginner, okay, in the stock market, you should take action now. We're almost done with 2023 already, right? And right now, we're in the midst of a great bull market, all right? Because again, we're in a new bull market right now. We just got into one this year. And I've been telling you guys that, and I was correct. And I was correct again that there won't be a market crash. I got a lot of heat for it, but hey, I was right at the end, right? And so 2023 to 2026, it might seem like you have a lot of time to work with, but you do not want to miss what will happen from 2023 to 2026, especially if you're a beginner. But again, if you guys are still staying on the sidelines, especially for the traders who have been kind of, you guys have been basically turned off by 2022's price action and price trend and the overall bear market in 2022. And if you guys are still staying on the sidelines, it might be time to come back. All right, I'm just saying might, even though I want you guys to come back, because again, right now, record cash is still staying on the sidelines, which means that should, if that amount of money is brought back into the market, okay, that will further substantiate my claim that we are going to have a great market run from 2023 to 2026. Because right now, we've been having a great run so far in 2023. All right. And so if you guys, if my current statement holds true, all right, because again, I've been correct so far about 2023, but if it holds true for the rest of the next 3 years, okay, you guys just have to buy me some coffee. No, I'm just joking. But again, I'm just giving you guys a precaution here, precautionary warning is what I would say. Okay, hey, thank you guys for 3 likes. Let's see if we can get to at least 5 likes this time around. Right? So for everyone who's just joining in, I just dropped some really, really important information about inflation and what to expect, and also what to expect for the rest of the year and for the next 3 years. Right? So if you guys have been following me for some time now, you guys know that since last year, I've been telling you guys to get involved with the markets from 2023 to 2026, and I've been very, very, very accurate. I got you on a smoothie. Hey, that's what's up, man. And for the people who are just joining in, if you guys aren't subscribed yet, make sure you guys subscribe. Okay, and make sure you guys turn on that notification bell on as well. Okay, so since people are just coming in now, let me just give you guys a quick summary on what I just said. Right, I always want you guys to come back to the recording to watch and rewatch what I said to make sure you guys remember what I said. But for the sake of, for the people who might have just come in, let me just give you guys a brief summary. Okay, so July's inflation data was cool again. It was great. You're still seeing deflationary action and inflation, if you guys want to call it that, quote unquote action, and that's good, right? We want to see that, even though the labor market is still very tight, but we're starting to see a little bit of cracks here of a potential loosening up a little bit on the labor market. But again, inflation is what really matters. That's the main goal of the Federal Reserve, and we're still going down at a pretty good pace, in my opinion, even though federal board members might not say, or governors might not say, that we're not going down fast enough. But we're going down nonetheless, and we're still heading towards the 2% target for inflation. Now, okay, headline CPI for July and core CPI for July were great, right? Exactly what I wanted to see, right? Business as usual with deflation. Now, here's the most important part. I've been telling you guys this last year, right? I've been telling you guys that we can't just focus on economic data anymore in 2023 because the market is going to desensitize to every major economic data reports. And we've been seeing that, right? And we basically didn't get a large movement today on CPI and the previous times that CPI came out, or any other major economic data. So that's proof again that I was correct, okay? And but the most important takeaway from economic data, right? Since now you might be asking me, hey Andrew, right? What should we be focusing on then if economic data points are not really important, or the market is not that sensitized to it anymore? Well, you guys should be focusing on what the Federal Reserve will do next. Okay, so again, with economic data, you need to focus on what the Federal Reserve will do next. Now, I know some of you guys also remember me saying that last year that even the Federal Reserve's actions will be desensitized by the market. And what I meant by that was that the current monetary policy and the current actions by the Federal Reserve will become slowly desensitized. And we've been seeing that as well in 2023. And so now, why am I telling you guys to focus on what the actual, effect that these data points will have on the Federal Reserve? Well, I'm trying to prepare you guys. I'm trying to navigate you guys. I'm trying to guide you guys into 2023, the end of 2023, and into 2024. And so what does this report mean? Well, first of all, we have another CPI report, August CPI report to go through, okay, before we have the September FOMC meeting, right? And we also have another jobs report, another jobs report to go through, okay? And these last CPI and jobs reports, they will be kind of the last data points that the Federal Reserve needs before they decide on a rate decision by September. Okay, and now why is this important? Because Jerome Powell and the Federal Reserve in the previous FOMC meeting, where they raised interest rates by 25 basis points, putting the target range to 5.25 to 5.50%, okay, they indicated that they have one more interest rate hike left for the rest of the year, and possibly after that it's going to be a pivot, right? We're going to see interest rate cuts rather than hikes into early next year. That's what I personally believe in right now. I'm still holding that presumption and sentiment that the entire market is giving still. But here's the thing, right? There's now a new sentiment and new presumption that came out today. Is everyone following me along so far right now with this brief summary? Give me a thumbs up in the chat if you guys are following along. Okay, hopefully I'm making it as simple as possible with this explanation. Okay, so I'm gonna continue to talk, but let me see you guys give me that thumbs up in the chat. So with that in mind, right, with what I just said right now, okay, right, there is a possibility now that the Federal Reserve might not increase interest rates anymore. And the previous FOMC meeting, was the last one. That is the new sentiment and new presumption that has just arrived based on what the federal funds futures market is telling us. All right, hey, what's up, everyone? What's up? Wow, see a lot of people coming in. Let's see if we can get to 10 likes now, since we passed 5 likes. Awesome. Perfect. All right. So for the people who are just joining in now, I'm giving everyone right now a quick summary on what I just told everyone initially when the live stream started. Now, if you guys are just joining in, my apologies, but you have to go back to the recording to listen to what I said, because it's very important and it will matter on how you guys need to invest and how you guys need to trade until the rest of the year and into even next year. Okay, so far I've been correct on the fact that the market will not collapse, it's not going to crash into late 2022, and the fact that we're going to have a great bull market run from 2023 to 2026. Okay, now I've been pounding into everyone's heads, whether you're a beginner or you're an advanced trader, 2023 to 2026, you need to get involved. Right? 2023 is almost over. I've been saying this over and over again, right? And I've been correct. The market has been telling me that I've been correct. So make sure you guys listen to my words carefully. All right, so again, I'm still on with the side that we still have one more interest rate hike left, which will bring us to that target range for the federal funds rate from 5.50 to 5.75%, which means I'm expecting another 25 basis points interest rate hike. Now today, thanks to the soft data that came in and it's showing that it's business as usual for inflation, we're seeing continuous deflation towards the Federal Reserve's 2% target. That's good. That's great, right? But now, what is the Federal Reserve going to do? Okay, so here's where the federal funds futures market is showing a new type of sentiment coming in all of a sudden, right? Thanks to July's CPI report. They're saying now that there's a slight possibility that in September, which is the next FOMC meeting, I believe it's the days between 19th to 20th of September. Okay, so 19th to 20th is when the next FOMC meeting will be, is that the Federal Reserve might not even have another interest rate hike left. And in fact, the previous one was the last one. That's a huge implication there, right? Because that means we're gonna pause starting this year, right? Because again, I'm still expecting another interest rate hike, right? And so we could pause for, until December and all the way up into 2024, right? And so that's going to relieve a lot of pressure for a lot of especially growth and tech/momentum names, right? And obviously a lot of unprofitable companies, right, who are spending cash like no other. But that's another story to look at. But, that's telling you, right, that there is a possibility. But again, what did I say earlier, a few minutes earlier, right? We still have one more inflation report to go through and another JOLTS report to go through as well, which is jobs report, right? Jobs. And right now, the labor market is still very, very tight. The unemployment is still at historic lows. I believe it came in at 3.5% last week. Okay, so you guys need to understand what's going on right now and what the Federal Reserve might be thinking, based on what July's CPI report was. Right, and that's what I've been saying. Right, that the market is going to desensitize to what economic data comes in, which we've been seeing, and what the Federal Reserve will be doing, which we've been seeing as well. And specifically, what have we been slowly desensitizing to? Interest rate hikes. Okay, and if you guys remember, on the previous meeting, when we hiked by 25 basis points, the market really didn't move much compared to the reaction that the market exerted whenever we saw another interest rate hike by 50 basis points, 25 basis points. Right? When you compare what happened most recently with the interest rate hike and what happened last year, right? The movements have been very, very drastically different, and the volatility has been very, very small compared to last year. So that's how you know the market is slowly and has been desensitizing to the Federal Reserve's current actions. And so what we need to be focusing on now is the potential for the Federal Reserve to completely pivot and shift away from interest rate hikes and more towards to the future where we can see interest rate cuts. Does that make sense, everyone? All right, so there's a lot of information to remember, but that is the entire kind of summary that I wanted to give you all for the people who just came in. So hopefully that made a lot of sense. All right, and I see some thumbs up in the chat. Awesome. And I see that people have thumbs up. Left us thumbs up on the like button down below. So thank you guys. Thank you very much. So hopefully this information is useful, informative, and most importantly, applicable. All right. Okay, so that was my brief summary there for interest rates and what we need to be looking out for in the future based on what happened with July's CPI report. Okay, and hopefully that provides you guys with a good future guidance on what could happen in the future in the stock market. Right now, now that we've kind of gone over that, let's go over specifically Chinese tech stocks. Okay, specifically the China Internet ETF, KWEB or KWEB. Okay, so today we saw a nice pop in Chinese names thanks to Alibaba. And I told my followers, I believe, was it yesterday or 2 days ago? I believe it was yesterday, that I think Alibaba will definitely beat with these, right? And right now they're seeing deflation, which is good. Okay, I told them this yesterday, which is good. But when it comes to more on the macro perspective, deflation in China is not that good. Okay, if you guys want to know why, especially for the members who are online right now with me in the live, I'll kind of explain why in the chat. But overall, Alibaba, the entire private sector, specifically in China, has been seeing some relief from, the regulatory arm of the government, or the CCP in China, right? The Chinese Communist Party. So right now, these companies have just been fined, and it seems like, at least from on the surface, it looks like the government's kind of easing off on the Chinese private sector, just regulatory-wise. So that's great. And if that continues, if that trend continues, stocks like Baba, right, and all the other big Chinese tech stocks like Baidu, Joy, okay, they should all start to see some sort of an increase in share price, right? As that pessimism slowly erodes away and more optimism comes into the overall sector, okay. And so that's the reason why I want to look at KWEB. Right, because I want to be involved in the entire Chinese internet sector, right, or just overall tech sector, right, and obviously the internet names in China are very, very big and large. They're very large companies, and they're the largest companies. Well, the largest companies are involving in, something off of the internet like e-commerce, right, and social media, and so I really want to focus on KWEB. And if you guys want to look at the leveraged ETF, okay, it's CWEB. Okay, this is the 2 times leveraged ETF for what you guys saw earlier, KWEB. Okay, I believe they had a reverse stock split earlier this year, if I'm not mistaken. Oh no, they had a, no, Yeah, okay. So CWeb, obviously, I mean, this is just the leveraged ETF. Okay. So KWeb, okay, I just want to be focusing on KWeb. You guys can focus on the leverage ETF if you want. But what I'm trying to focus on here is kind of the entire general sector of China, right? Because again, I don't really want to choose individual names whenever we see this shift in this overall momentum in the entire Chinese tech sector, right? Because again, sometimes individual names can still lag behind or fail to break out while the entire sector is moving right to the upside. I've seen that happen multiple times in the new bull market, or even multiple times in the bear market to the downside, right? Where we see some individual stocks just moving up when the entire sector is moving down, right? And so, you know, it's something to think about, right? Whenever you guys are looking to either invest, you know, or just trade something, right? And if you guys really want to just focus on the entire Chinese sector, I highly recommend KWeb or KWEB, KWEB. Right? And again, if you guys want to focus on CWeb, okay, which is the leveraged 2x ETF, which had a stock split earlier this year, back in, oh no, not this year, last year in June, right? So it's been over a year. Okay, you guys can look at this one as well. Now, here's the most important part of why I wanted to show you guys this, okay? So there has been an interesting option that has been purchased in large amounts, in very large amounts, actually. Okay, so let me give you guys this information. All right, so I believe what was it? I think it was right. So 33 strike calls that expire on November 17th for KWeb. If you guys take a look at that right now on the options chain for KWeb or KWEB, okay, there was initially 30,000 contracts that were outright bought for this name, right? And that's a very interesting trade because, I mean, I do have a level at 33 here. Okay, and so if I ever want to go long, I would say the near-term maximum profit target will be 33 for me. And obviously the ideal one will be maybe around 35.50 at this high here that we saw, the most recent previous high. But just based on this flow here, wants me to believe that the sentiment is changing, right? And we've been seeing higher highs and higher lows for the past month, right? A little over a month right now. Okay, and you know, just based on the weekly time frame as well, we start to base, right? We're forming a base here, and what does that mean? Well, both bulls and bears are not really, you know, fighting it out, and we're kind of seeing a neutral trend, right? We're seeing a sideways trend. We're consolidating, but that also means that the bloodbath has stopped, right? So the momentum and sentiment is slowly changing as the price basically goes nowhere. And it hasn't been going anywhere since early 2022, right? And the weekly time frame here really shows you that there is a certain amount of seller exhaustion that has occurred from 2021 to 2022. And it's telling you that maybe, you know, we're starting to see some optimism coming out from pessimism, right? Because we've been very pessimistic for the past 2 years, 2+ years. So I want to be involved in that when we see that momentum shift from being very pessimistic to being more optimistic, right? So KWeb, right? Focus on this one. All right, I'm giving you guys a little freebie here, okay? And focus especially on that 33 strike call that expires on November 17th for KWeb. All right, again, you guys can still look at CWeb, which had a stock split. Okay, all right, CWeb, that they had a 10 for one, or hold on a second. Yeah. Okay. So, you know, it's oh, actually, never mind. I'm reading the numbers wrong here. It's a 1 for 10 reverse stock split. There we go. Yeah, I was about to say, because I was like, wait a second. the numbers are a little bit expensive here because I remember this being very cheap. All right, and so this is what they do, right? These leverage stocks, they tend to try to make their well, they need to keep the share price afloat instead of getting going down to zero. So what they do is they're incessantly reverse stock split, right? And for CWeb, they had a 1-for-10 reverse stock split. Okay, so that increased the share price, and also if anyone was owning shares, for example, if they had 10 shares, that was converted into 1 share, right? But the value of however many shares that they were holding stayed the same, and that's what reverse stock splits are, and that's what the opposite of that will be a stock split. Okay, so it's a very simple concept to understand. So if you guys didn't understand that, then let me know. I'll make sure to clarify that for you all. Now, again, Chinese sector, I believe is going to be crucial for the next couple of months, especially as we continue to see a sector rotation from growth Momo stocks in the US market, okay, specifically in the US market, and seeing that money outflow into defensive sectors and international markets, right? We're starting to see, or we've been seeing, continuous money inflow from growth Momo stocks into defensive sectors like energy, real estate, industrial, even utilities, even though utilities looks horrible right now, materials, right? And even just simply rare earth metals as well, specifically. So again, the defensive sectors are on fire this year, or well, so far, it looks like they're gonna continue to move on higher and have that relative strength, maybe even until the end of this year or the rest of this year. And also international markets like emerging markets, or specifically like what I'm looking at right now and what I've been telling you guys, the Chinese market, or the Chinese names here. So hopefully that will give you guys a good guidance. And again, I've told my members this a couple months back, that this could be happening as the summer seasonality trends start to hit. All right, I told them this I think middle of June or early June. All right, that was a couple months ago. So if you guys want to be prepared, a lot earlier than what I'm telling you guys right now, make sure you guys DM me. All right, DM me on Instagram at chartsfocus1. My details are also provided below in the description box. Okay, so make sure you guys check that out. All right. Okay, so that's it for what I have to say for tonight, guys. Does anyone have any chart requests that you guys want me to go over? If not, then I'll end this live stream for tonight. But yeah, let me know if you guys want me to go over any tickers, and I'll be waiting. We have our first ticker. Caleb, welcome. I think, Caleb, is this your first time in the live? I think I remember seeing you in the chat room like a long time ago. Maybe it was a different Caleb. But no, nonetheless, let's take a look at UNG. So that's the natural gas ticker. Okay, this is the main ticker that I also look at for natural gas. Okay, or specifically, United States natural gas, if you guys want to be very, very specific, but I just considered this the natural gas ticker to look at. So, what's actually funny is that we've been looking at a name that actually coincides or is related to natural gas, which is RRC. All right, so we've had an absolute banger on RRC. Okay, if you guys are a member or one of my students, or both, we absolutely killed this trade. I believe we got an entry here on this candlestick, and we saw the nice breakout from this rounding base chart pattern. And these rounding base chart patterns are amazing because we tend to just round like this on the top right, and then we continue to move up higher and higher and higher, right? And so, RRC, great trade. We swung this with amazing execution, precise execution, although I personally could have held longer, and the members could have personally held longer, maybe all the way up to 33 at least minimum. But again, hindsight is 2020, right? No one is perfect, but either way, execution was perfect, the timing was perfect. And just to give you guys a little hint, we entered in RRC again for potentially a 2 for 2 out of the trades that we're going to take on RRC, because we got the first trade perfectly, and we had a great profit on RRC for the first trade. And then let's see, the second trade goes well. But anyways, okay, RRC had a great strength since last week, thanks to UNG making some great strides that I have not seen for quite some time. All right, so we are making some pretty good gap ups last week and this week as well. Okay, and what I like about this is that UNG so far, Caleb, if you're still here, hey, first time, welcome. Caleb, if you came into the live stream a little bit late, I always tell everyone this, and for the people who are just watching right now too, you guys should know what I'm about to say. If you missed the first few minutes of the live, or any of my lives in the future that you decide to attend, I always start out with the most important information that I want to share to everyone, especially because it's important, it's useful, and it's applicable, right, to your actual trades. So, if you missed it, make sure you guys always go back to the recording. I always say this. And Caleb, I have my live streams, my public live streams on Tuesdays and Thursdays at 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. And sometimes I like to give a little bit of grace period, so I might start 15 minutes later after 6 or 9 p.m. But again, it's relatively around 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. So if you really want to be specific on when to attend, make sure you have the notification bell on after you hit subscribe so that you know when I am live, and YouTube will send you a notification, or even I believe it can send you a email notification as well. All right, so welcome Caleb, welcome. Hopefully I can see you in next week's live streams and also the future ones as well. Okay, so UNG, sorry, that was a little bit of a long tangent, but I want to give you that information. So UNG, I've been tracking this one for quite some time, and I have had some, bad luck in early 2023 trying to find that bottom, but I was catching a falling knife, so it wasn't that fun. But right here, I did catch this nice little jump, but it wasn't worth it since I was trying to catch the knife somewhere around here as well, and obviously, I mean, just based on what you guys can see with your naked eye, it didn't go well, right? In these 4 weeks here, or in this month. But right now, UNG, okay, is making a nice broadening wedge, or bottoming megaphone chart pattern. Right, if you guys want to be a little bit more simpler with the terms here. So what I just said there, those two different terms are synonymous. Okay, you guys can use either or. Now, UNG here, this chart pattern specifically is usually a bullish chart pattern. And right now, okay, after being battered all the way to the ground and even hitting lows that we haven't seen in 2020, or, okay, if it's gonna load, well, we've been hitting new lows right here. So let me just give you guys the entire scale here. So we have hit really just rock bottom, right? And so, obviously commodities, when it comes to especially energy names like oil and natural gas, it kind of all boils down to supply and demand. But I'm not going to talk about that right now. I'm going to talk about the technical analysis here. And so based on UNG and what it's showing us, it's ready for a reversal. Right? So whenever I see this broadening bottoming wedge, or bottoming broadening wedge, or bottoming megaphone chart patterns, okay, it tells me that the price is ready to move or at least reverse back to the upside. And one thing that I'm liking right now for UNG is that usually when we start to see these bottoming, broadening wedges or megaphones, okay, when we see them fail, this is what we do. Okay, let me just give you a quick drawing, right? We start to hug the descending, okay, this descending support trend line. Okay, let me make it green here. Okay, and this is usually what I tend to see when I see that these chart patterns tend to fail, right? When they do fail, this is what happens. But this is not what I'm seeing right now on UNG. In fact, we've made higher, okay, we made higher lows within the chart pattern, and if you go on the daily time frame, we have created a micro double bottom within this broadening wedge or megaphone chart pattern, right? So we have two bullish chart patterns, right? We have one macro bottoming megaphone chart pattern, and we have a micro double bottom, which is again a bullish chart pattern. So we have converging, right, and complementing bullish chart patterns. And so this tells me that there is a need for the price to try to break out to the upside. Now, this is concerning though. Okay, it's just from a daily standpoint and daily perspective and the daily time frame. This pullback I don't really like because the volume is kind of high here, right? And it's not going to be worried too much. It's not going to worry too much for now because again, I'm just basing off of 2 daily candlesticks and 2 volume bars here. Because again, we're still staying within the parameters of this inherently bullish chart pattern that is the bottoming megaphone chart pattern. Now, Caleb, if you want to look at the opposite of UNG, okay, I would recommend you to look at cold. Okay, now here is why I think UNG can break out of that bottoming wedge here. Okay, the bottoming broadening wedge or bottoming megaphone. Okay, so hey Adriana, what's up? It's been a while. What's up? Welcome back. And Val, I'll do gold as well next. So cold here, okay, has officially started a new downtrend. Okay, so this is the ultra short natural gas, right? And so cold here had a fantastic party after we saw natural gas hitting kind of a intermittent top, right, back in November. Right, so if you look at UNG, okay, right, we kind of formed an intermittent top after bouncing after that initial drop, right? And so cold just was having an absolute party here, but now we're starting to see that cold is in a new downtrend. Every single one of my short-term and long-term SMAs here, these squiggly lines, these oscillating lines, are pointing downwards, and we have lost the major daily 200 SMA. Right, this is the long-term support here, based on the SMAs, and we lost it. Right, and so in the next couple of weeks and months, I think UNG can definitely break out as long as the supply and demand, market here for natural gas is relatively supportive of natural gas to go up higher. Okay, so the economics of supply and demand on commodities, I'll kind of go into that more maybe in the next live stream. But I just want to focus on the technical analysis for today. Okay, so Caleb, hopefully that was useful. Give me a thumbs up in the chat room if that was useful, or if maybe, hopefully you're still in here. But for UNG, again, I really want to see a good breakout over $8, to be honest. That's like the major whole number level that I really want to see us breaking out of. And hopefully we can get back to double digits, okay, if the supply and demand, market and economics of natural gas allows us to. But I believe, if I remember, the natural gas inventories came in at a high reading again, if I read the news correctly today. But again, I was more in tune and more focused on the CPI data. So, hey, awesome, Caleb, awesome. And Adriana, I'll do Disney as well. And also, Adriana, since you came in late, make sure you watch the recording, as I always say. All right, because I gave out really important information that will be useful, important, and applicable for the rest of this year and into next year. Okay, and Adriana, you should know by now. You've been into a lot of my live streams, so. All right, next one is gold. Yeah, so gold, it has been interesting. Okay, to say the least. So first of all, let's just focus on the technical analysis here. So for gold, actually, let me just go to GLD. Okay, so I have my levels here. So gold has been making a cup and handle, a huge cup and handle. All right, and here's the cup. If you guys don't see it, there's a big cup, and so far we've been making a nice flat handle. Okay, if you guys also don't see it, let me just give you guys a quick drawing. Okay, all right, this is the relatively like around there. All right, it's a flat handle. So if you guys want to see the entire chart pattern, and if you guys can still see it, so here is the cup and here is the handle. Let me actually make that better. All right, let me make it a little bit more straight. All right, so this is the cup and handle, right? A textbook cup and handle. Cup, which is a rounding bottom here, and the flat handle. Okay, so gold has been making this chart pattern for years, multiple years. All right, and there's been a lot of people that have been bullish on gold, and who have been watching this chart pattern form for the last multiple years, and we still have not yet broken out to the upside. We still haven't reached that psychological magnet price level of $200 for gold. Okay, and also look at this. Snipe that gold entry, right? Back in November 2022. Right here, 156, perfect. Okay, this is a nice swing trade back in 2022. Anyways, I'm going on tangent again. But so what I want to really wait on, Val, for gold is I want to see a definitive breakout. Okay, let me take out all these lines since I don't even need that anymore. Okay, so I really want to see a definitive breakout, and hopefully, based on what I'm seeing on the monthly time frame, we can continue to hold the 10 and 21 SMAs on the monthly time frame here. Okay, let me take this out for now. Okay, and so far we see that the monthly 10 and 21 SMAs, we have formed a bullish crossover. So that's good on a monthly perspective. Now, the most important thing here though is that, again, I want to see a conclusive and definite breakout. And where will I see that? Bam, right here. Right? So somewhere around the area of 193 to 194.50. Okay? We need to get over this area, this little supply area, because so far, every time that we reach that specific area or even the specific level at 193 or 194.50, okay, we reject. And the most recent time was when we even got close to the vicinity of this supply area, and then we went back down again, failing to break to the upside, right? But here's the interesting part. We now officially have 3 retests at or around this supply area. And if you guys know the 3-touch golden rule, you guys know that we tend to break out of any area, supply area or demand area or specific levels, okay, resistance or support, once we have 3 touches or 3 retests. So at some point, okay, based on the fact that we have an inherently multi-year bullish chart pattern, this huge cup and handle chart pattern, plus what we're seeing here on the flat handle here, okay, there's a higher probability of us breaking over at least 194.50 and ultimately giving us new all-time high prices for gold. And we can head to that magnet psychological whole number level of $200, 200.00 to be exact. All right, so this is very, very important to look at. All right, and that's the reason why we always want to look at the bigger picture by going out on the time frame to the bigger time frames of the weekly and the monthly. Okay, so that is my overall view. Obviously 156 was the perfect entry point to have since last year, since we've been basically ranging from between, I would say 151 to 194.50. Okay, those are the min and max ranges as we're forming this handle on the broader macro cup and handle chart pattern. All right. Okay, so Val, give me a thumbs up as well if that makes sense. Okay, but so far, gold hasn't been really acting well as, quote unquote, an inflation safe haven. Right, just like Bitcoin, it was supposed to be an inflation safe haven as well. But both are not doing that, so that's kind of interesting to see. Especially when you expect to see gold specifically, an actual, tangible object, okay, not acting as an inflation hedge, right, or an inflation safe haven. Okay. Yeah, Val. Yes, I know. Yeah, gold. Yeah, same thing. The thing is, it's the same thing, right? It's just the different numbers here. All right, the CFDs on gold. All right, and so again, you can use the exact technical analysis that I gave you on gold on GOLD, gold. Right, and so the official breakout area for this one will be at around, I would say over 2075, right? 2075, literally. And if we do break over that, then we're beelining straight for 2100. Okay, and but yeah, I mean, literally the same price action, right? GOLD and GLD, and the same technical analysis that I just gave you for GLD. Right, you need to treat GOLD just like how I just described and analyzed GLD on the technical perspective. Okay, it's just the levels that are slightly different because, again, different numbers obviously, but the technical analysis is the exact same. All right. Okay, Adriana, Disney. Yes. So Disney. So here's a fun fact, Adriana. So Disney, I've actually been a bit bearish on this one for quite some time now. And I was expecting Disney to actually have really bad earnings. But again, the earnings weren't too bad at all, in my opinion. It just had a little bumps here. But it seems like overall the investor sentiment has been bullish, which is why we reacted pretty bullishly today on Disney. I had a pretty nice bearish target, price targets for Disney. My members know this. I've been saying this for months now. I wanted Disney to go down and hit at least somewhere around 79 to 80. Right, so it's around 79 to 80, right? And basically the reason why I said that was, well, let me actually even show you guys. Okay, I think it was somewhere around here. Or maybe I'm looking at the monthly here. There we go. Let's go back to the weekly. Okay, So actually, let me exit out this. Yes. Okay. So on the weekly time frame, the most previous, big pivot point was back in March 2020. March 2020, right? When we found that nice bottom on March 2020, and that's when we saw that huge V-shaped recovery in the entire U.S. markets. Okay, and I wanted to see a revisit of the COVID lows, which was at 79, and so I wanted to kind of give a demand area. So I said 79 to 80 might be a great area to test for us to have a nice solid bounce back to the upside. And I was expecting to see that happen based on what we saw on the earnings report last night after hours. But instead today, surprisingly, we had a lot of bullish activity, and a lot of call flow as well, calls activity as well on Disney. And we had a nice break to the upside, and it was one of the only few names that were consistently bullish for the entire day, while the entire market was kind of pulling back, having a little bit of intraday volatility and etc. So, Disney, I think I need to change my perspective here because again, okay, this $85 support level that I was also telling my members a couple months ago, okay, this level goes all the way back to 2017, 2016, and even 2015. Right? I mean this is a multi-year level. And yes, we did break it in 2020, but before that, we've been holding it. Right? We revisited that area around here. Right? And we've been revisiting it multiple times so far, last year and this year. So that made me want to be very, very bearish because we come back down to this multi-year significant level on the weekly time frame at $85. And so that really wanted me to see a revisit of at least COVID lows at 79 or an area between 79 to $80. So, you should take note of this $85 multi-year significant level of support, right? Because maybe if you want to have Disney for the long term, and also Disney is a great long-term name to have in your portfolio, $85 can be your kind of stop loss for any type of large investment into Disney. Because again, if we lose 85, then it's over. We're going to see a large dip to the downside, right? And there isn't a lot of support left if we break below 85. Other than 79, okay, and 79 to 80, that little area, okay. Now, based on the current price action, I need to be bullish, right? Hey, thank you guys for 8 likes. Wow, thank you guys very, very much for 8 likes. It feels good to be back, and I can tell that you guys are really enjoying the live and the fact that I'm back. So again, guys, I will be live continuously from this point forward on Tuesdays and Thursdays as per usual there, at 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. Now, if I'm starting at 6:15 or 9:15, I still consider that at the same time. I'm just giving you guys a little bit of grace period to get ready for my live. But then again, if you guys don't want to know exactly, or if you guys do want to know exactly when I'm live, just hit subscribe on the channel here. If you guys aren't subscribed yet, I don't know why you wouldn't be, and then hit that notification bell. All right. Okay. Oh, 9 likes now. Thank you guys. Okay. So Disney, we have on the weekly time frame, okay, this nice descending trend line. Okay, and we actually retested that today. Okay, this is a nice descending resistance trend line. And so if you're able to break out of this descending resistance trend line, which is going to coincide to a horizontal level somewhere around $92 to $93. So if you guys just want to use areas, and then I would say a supply area between 92 to 93. Okay, so if you're able to break through that supply area of 92 to 93, we can see an explosive move back to the triple digit number of $100. That golden number of 100, the psychological number that every company craves to achieve once they're in the stock market, right? Once they're publicly trading, right? Most companies want to aim for that $100 golden number per share price, okay? And Disney has done it already. But if we do decide to break over that 92 to 93 supply area, we'll most definitely like to see, or we'll see ideally, a large and quick move to $100. Okay, and why do I say it's going to be a quick move? Well, based on the current weekly candlesticks volume here, right? It's been quite a while since we've seen this large bullish volume bar, because just this year alone, we've only had large red candlesticks on the weekly time frame, right? That should be saying something. And that's another reason why I was very bearish until today's reaction to yesterday night's earnings report. Okay, so Disney, Adriana, if we do decide to break over 92 to 93, that supply area, will most definitely rocket up to this magnet psychological golden number of $100 per share. Okay? All right. So that is it for tonight, guys. Thank you guys so much for the support. You guys came out in droves today. Awesome, awesome, awesome. And we're shy of one more like to get to 10 likes, but that's fine. I mean, you guys are clearly enjoying my lives, my content, especially the informative, useful, and most importantly, applicable information that I give you guys every single time that I try to, share all this important, very, very important information on every single live. Okay, so I'm glad that you guys are enjoying it. I'm glad that you guys are trying to always join my lives on time. But again, if you guys don't have the time, okay, during your day to watch my live streams, make sure you guys watch the recording. Why do I say this all the time? Because I start my live streams with the information, the very important and applicable information that I want to tell you guys and I want to share with you guys. All right. And so, again, thank you guys. Hey, 10 likes. Right as we're about to end here. 10 likes. That deserves a round of applause. Thank you guys so much for the incredible support so far. As you guys are welcoming me back to the live streams here. Right, so again, thank you guys so much for 10 likes. This really helps with the YouTube algorithm. And again, if you guys are just joining in now, my apologies, but the live is ending. But make sure you guys watch the recording, which will be uploaded right away by default once I end the live here. Okay, so once I end the live, the recording will be uploaded on my channel by default, thanks to YouTube's awesome, actions. YouTube's algorithm, YouTube's code. I don't know the right word. The right word is, my God, can't speak today. Maybe I just need to drink some water. My mouth does get dry, guys. I know, TMI, but when I'm talking constantly for like an hour, my mouth gets really dry and it's hard for me to pronounce words. So my apologies, guys. But so I'll see you guys all on next Tuesday. Okay, at the same time, 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. But if you guys check and I'm not live, then you guys know that I'll just be giving everyone a grace period of about 15 or maybe even 30 minutes sometimes. So, but if you guys don't want to constantly check to see when I'm live, just have the notification bell on. It's as simple as that. right? Just have the notification bell on after you subscribe. Okay, make sure you guys hit that actual bell icon that you see next to the subscribe button. Okay, and you guys will see when I am live. It's as simple as that. All right, have a great rest of your night. Hopefully, this is some actionable and applicable information that I've shared with you all tonight at the beginning of the live. And hopefully, it'll be very, very informational and, well, hopefully, it'll guide you guys for the rest of the year for your investing plans or trading plans and into early next year as well. Okay, have a great rest of your night and good luck tomorrow. Thank you guys so much for joining.